maybe we should start, Dave and Alex, with just what we're seeing. Like we'll kind of continue on the theme of what we were just talking about, how commercial tenants have been focusing and fixing some of the problems that they have with paying rent and working out a deal with their landlord. But I also want to keep it positive. And I want to kind of talk about some of the longer term impact that we think this is going to have for build outs, for construction, and just for use of commercial space. So I don't know if one of you guys want to. I think at this point we're all trying to figure out what's the emerging market solution to the the problem that everybody finds themselves in from the landlord and tenant side. Everybody's going to lose money on one side of the ledger.
Sure. So thanks for having us. This is David Stockel speaking. Can you hear me okay?
Yep.
Great. So I guess to give a little structure around the topics that Alex and I are going to cover, I'll kind of start off with a few different buckets that we can touch on. One is kind of on the property and facility management side of the commercial real estate business. We'll certainly get into rent payment, things we're seeing on that front, potential solutions. We'll touch on construction, projects that are on hold, processes that were underway that are now paused. We'll talk about some active tenant searches and kind of what's going on there as of today. And then we'll get into some impacts in the market. So for starters, property and facilities management. So CBRE has been putting out a lot of very relevant content for both internal purposes and for our customers. So figured we'd run through some of the discussion points that occupiers and tenants are having with us and with our colleagues. They're talking about a phased approach to reoccupancy. When things do start to settle a bit in New York City, it's not going to be the flip of a switch. It's not going to be, Friday, everyone's working from home, Monday, everyone's working in the office. So a lot of occupiers, large and small, are figuring out how to re-enter the physical office. Who's most critical, who might be able to work from home a little bit longer, all the different considerations you have to think about from the physical space standpoint. So that's one topic going on right now. A re-engagement with all suppliers and service providers, particularly cleaning, right? That's one of the topics that comes up a lot is how do we clean our space? How do we make sure the air circulation is appropriate to not be spreading germs at the rate that was once not a big topic of consideration. A lot of the hoteling and hot desking, for shared spaces in order to gain efficiency, that's being recontemplated because obviously people are more sensitive to sharing space with people they work with and know or people that they don't really know that well. So getting back to more of a one-to-one ratio is something that people are talking about. Temporarily removing, gathering areas or limiting gathering areas like bench style seating areas with high densification, conference rooms with more people than you would otherwise want to be sitting around in this environment, common areas like lunchrooms and things like that, and to make sure that social distancing is still encouraged once we re-enter the workplace. Like I mentioned before, enhanced cleaning services, figuring out actually which supplies combat germs the best, figure out what type of surfaces are most appropriate. A lot of talk about copper and materials in that family that tend to kill germs faster than some other surfaces that weren't really paid much attention to prior to COVID-19. Management of all the entryways into buildings, the physical way you get from the curb, so to speak, to the reception area or to your physical workspace. So those are some of the topics that we've been talking to our clients about. People have been asking us a lot about, and a lot of the landlord clients for us in CBRE are trying to figure out what's this going to look like and how do we best prepare? How do we utilize this time as best as possible to prepare so that we can accommodate this phased re-entry back into the workplace. On the topic of rent payment, I know Alex is going to get into some of it, so I'll keep it somewhat high level, but we had some statistics that came out from CBRE that we thought we would share. One of the luxuries of our firm is the size of the firm and the resources that we have and the data that we're able to generate for our customers. So just pulling up a statistic here that I found pretty interesting. Many of the, and this is something from our research department and from our institutional debt advisory team, the kind of REITs, private equity funds, pension funds, and developers across the country aggregately are reporting that 70% of office tenants have paid their rent for April, and they actually believe that number will grow to 90% by the end of the month. So that's some good news. So it's certainly higher than I think some folks were forecasting. And then on the industrial side, there hasn't been much of a hiccup. Obviously, the focus here today is office, but there's a lot of office occupiers looking at deals like short-term renewals with a pending expiration, capital saving type of strategies to implement. A lot of the longer-term opportunistic expansions have been put on hold, as you might imagine. But there's still plenty of tenants out there that are trying to figure out what they're going to be doing after this. So, this is obviously a pause in the market. Our Q1 stats for CBRE are trickling out now. And, obviously the late March portion of it was, leasing slowed a fair amount. As far as interiors construction, a lot of considerations here, obviously from a strategic standpoint and then from a legal standpoint. If you have a lease that's already in full force and effect and your space is either being built out by you as a tenant or by the landlord, that's obviously on hold. And as Mike and Lee, you certainly know, there are all sorts of, delivery penalties, late penalties, and things like that. They're either borne by the tenant or by the landlord, depending on who's in control of that process. Those are all being reevaluated out of necessity, as you might imagine. A lot of the construction is on hold. Anything that's obviously considered non-essential. So there is there's a little bit of kind of opaque time a couple of weeks ago where we weren't sure what exactly was deemed essential versus non-essential. I think that's now been clarified for the most part. But that's some of the things that are going on there are considerations from construction standpoint of where your supply is coming from. One of the things that a lot of tenants maybe didn't think about if a landlord was building out their office space for them was where are the supplies being sourced from. If they're local, they might be a little bit more easily obtained, but if they're overseas, which a lot of the kind of larger contents, think of a lot of glass products, a lot of steel products overseas, whether it's Europe or Asia, the logistics and supply chain side of things are obviously very disrupted right now. So that's some of the things that we're considering here, and I know Alex will jump in on a couple more of those. With regard to active tenant searches, what we're seeing is, Mike, as you said, there's some good news out there. There are some leases getting signed. There are some renewals that have gotten executed. We executed a couple on our team recently. So there are still deals getting done. And, so that's obviously, positive news. We had a CBRE internal town hall with about 400 plus people this morning, and a variety of landlord representation brokers in particular chimed in saying they've gotten a couple deals done, and some other deals that are inching towards the goal line, so to speak, albeit at a slower pace than it would have been 4 to 6 weeks ago. Some other large transactions actually got completed downtown in the financial district as well, so that was all positive news. But for tenants who are actively searching for space, obviously the first problem you have is you physically can't tour office buildings right now. So a lot of virtual tours are being done, a lot of Zoom calls and things like that, as you might imagine, in order to replace the human interaction and the physical touring of office properties. A lot of tenants taking a bit of a wait and see approach, as you might imagine, trying to figure out what's going to happen in the market. But people still, I think, overarching themes that people are yearning for information. And that's something we've been providing in real time. What are other tenants doing? What are their peers doing? What are landlords doing? What are they, how are they trying to rethink of deal structures in order to keep things moving forward? So that's, some of the things that we've seen. And then I guess the last kind of bucket that I'll touch on before turning it over to Alex for a bit, and obviously fielding any questions if you'd like us to do so. The state of, the office market going into this in New York City, the office market was strong. So that's a good thing. There's in previous situations like a financial recession in 2008 or a 9/11, the market, the economy and the New York City real estate market in both cases were not in as good of shape going into those events. So it exacerbated the issue once this, once the crisis occurred. Office employment in New York City was at an all-time high prior to COVID-19. So that's obviously good news that we're starting at a level quite high prior to what's occurred over the past, call it 4 weeks. Sublease inventory, which is usually a good key indicator for how the office market will hold up. Sublease inventory was quite low relative to overall vacancy. As sublease inventory in our market increases, it puts pressure on landlords to revisit their economics that they like to transact at, whether it's rental rates themselves or whether it's concessions being offered in relation to rental rates. We do absolutely expect sublease inventory to rise, but the fact that it started off at a very low basis is a positive for the market. The flex space market obviously is something that I think everyone is paying close attention to. Flex space overall in Manhattan is about 16 million square feet of our, call it 415 million square foot inventory. What does that mean? As some of the flexible providers try to reassess their portfolios and their commitments, it could cause more space to come onto the market. But the flip side of that is, I think, the positive side is that there are a lot of tenants who are going to want and need short-term space, whether it's reevaluating their business as they come out of this and enter back into the workplace, whether it's certain key groups that might get displaced for one reason or another that need to get plug-and-play space relatively immediately. Flex space is not a fad. It's something that will be here long-term. I think the footprint that the flex space providers occupy is something that will get reevaluated and is getting reevaluated now. No real change to the development pipeline and future projects coming online. Obviously, a lot of them, pretty much all of them on the office side are delayed at the moment. But from what we've heard so far, no big plans to scratch large-scale development projects, which I think speaks to the strength of the market. Those are some of the topics I wanted to cover now. I guess I'd turn over to Alex, who is an attorney by trade, actually, and can probably offer some insights as to what he's seeing and hearing. And Mike, feel free to let us know if there's certain things you'd like us to drill down on.
Yeah, no, I think so far we're hitting all the right notes, and I did want to hear an update on the market. So it's good to hear, because it sounds like the market's positioned to absorb. If it was saturated with sublease space already, or if we were seeing a weak market heading in, have a much bigger problem on our hands.
Correct.
Yeah, I guess it's hard to know. If anybody wants to throw a question in the chat, we can address that, because it's hard to know what the concerns are of the actual people on the call. So let's just move on. I guess we can talk, Alex, a little bit about what we're seeing for tenants that are already in place, or that are at the end of their negotiations. How's that changed, the discussions with the landlord? And landlords, especially in New York, are traditionally very black box and private about the deals that they cut. We don't expect that to change. So it makes it a little bit more difficult to figure out what's reasonable and what people are seeing. So maybe we could talk a little bit about that.
Sure. Thanks so much. And David, obviously, thanks as always. Make my job pretty easy. You gave a pretty thorough high-level summary here. So I think that pretty much covered the landscape. In terms of discussions with specific landlords and what we're seeing with tenants, it really runs the gamut. And for the most part, as David said, we're basically acting as a clearinghouse for information right now for our tenants and our owners that we represent. And essentially, each scenario and each lease document stands on its own and is a completely different scenario, as likely Mike and Lee would tell you. I think what's particularly interesting and also surprising is we're having these rent relief discussions every day, rapid fire, with tenants and owners. And what's actually pleasantly surprising is that even though we deal with large institutional owners like SL Green that are own the largest portfolio in New York City, all the way down to just family ownership, all the way out in Queens, we have had really productive conversations at every level of ownership. And I think the theme is that owners realize that this is a widespread problem with a cascading effect throughout the market. And whether you're in early stages of a negotiation and need to press pause or need some sort of inducement from a landlord to proceed with a deal, whether it's financial or legal, and you need additional language that says, hey, maybe we need to push commencement off until, you know, a government mandate has been lifted and you're actually physically allowed to occupy a space, people are pretty accommodating. And I think both parties have been always pretty good at kind of mutually understanding the situation. I think also, if you're in the midst of a transaction, you know, understanding and also kind of, we're seeing a lot of is tenants don't want to be the one tenant that, you know, quote unquote, paid full market for a sort of deal or a transaction that they're in the midst of, whether it's a renewal or new space. Nobody wants to be the sucker. Nobody wants to be the one who missed the boat on, well, you know, the entire market has now been repriced post COVID-19 crisis, and you were the one who paid at the top of that market. So to the extent that a tenant's looking for specific relief there and hey, we need a financial concession, you know, to the tune of X dollars, owners will typically at least entertain it if it's a specific and somewhat reasonable ask, because the situation just evolves on a daily basis. So, I mean, a few weeks ago, we had some of these conversations and we basically said, listen, you know, the market does lag macroeconomic conditions, and we don't know that we're necessarily going to see a X dollar per square foot adjustment in the market. And now we're seeing concessions, you know, significantly increasing on the landlord side. So I think that's a good segue into existing leases and rent payment. And, you know, we just had a conversation this morning with a tenant of ours that's in the hospitality business indirectly. It's a florist, and they basically, you know, they're a smaller group that we work with, but they're looking for rent relief. And we had a really productive conversation with their family owner, and we had it in the context of potentially extending their lease obligation. So it wasn't necessarily a quid pro quo. It was kind of a fluid conversation. I think depending on the industry that the tenant's in, you start to look at the individual nuances of legal issues, whether it's, you know, maybe it's a force majeure clause that applies. Maybe it's frustration of purpose. You know, is it casualty? Are you is there an actual damage to the premises, and can you not use the premises for some reason? So it really is a case by case basis with each tenant, and it just depends on the specifics and the dynamics of each situation. And in terms of our earlier comment, just of being an information clearinghouse, I think understanding what the drivers are for landlords, you know, is really important, because if you're a tenant, you need to know that, you know, you might be able to get concessions to the tune of free rent, because conceivably, if you're not touring space, you can't necessarily have an easy time leasing new space. So a landlord might be much more willing to give free rent as a concession versus a monetary, you know, base rent discount, because that's going to translate directly into their pro formas and their bottom lines in terms of their ability to secure debt. So I think it's just knowing what the drivers are and the push-pull between the landlord-tenant relationship. And that's what we're seeing a lot of right now.
Yeah, I think you hit all the right notes on that, Alex. And you mentioned, you know, even just offhand, that every lawyer in New York City is looking at those provisions: frustration of purpose, force majeure, impossibility, and even, you know, the more creative minds are trying to find a way to call this a taking. You know, casualty even was thrown in there too.
Yes.
When it comes down to it, nobody wants to, well, I shouldn't say nobody, but 95% of the tenant pool doesn't want to be the one to spend years in litigation trying to make case law. You know, that's great for an attorney to have that case on the books under their name. You know, litigator's dream, maybe you'd call it, especially after all the billables. Everybody, I think, is looking for a practical solution if they can get it, and not have it go there. And yeah, it's a portfolio problem for these landlords. And I think across the board, I'm not sure about it. You know, in other parts of the country, you're hearing about kind of quicker concessions. And I think in New York City, everybody's kind of waiting. And a lot of it has to do with some of the bills that are still pending. You know, will there be some kind of government intervention that's going to help one side or the other, or help both sides to help each other? So I don't know that we're going to see, I don't know of, and maybe you guys have heard of some others, won't mention any names, but I haven't dealt with any tenants or landlords that have talked about a default notice going out yet. I'm sure there are some that have gone out.
You haven't heard about it?
Yeah, for the most part, everybody gets it. You know, the governor said it when he issued the order, we're on pause in more ways than one. So it's wait and see. And this is great, you know, to have guys like you on here. I like the phrase information clearinghouse. And I guess in some ways we're trying to be, you know, the same thing on the law side. That's all we can do right now is just share the info we get and keep a good read on what the market is doing. And when the courts reopen, what the courts are doing.
Definitely. I mean, the one positive note too, I think also just to note is our team specifically focuses a lot on the life science industry. And the one thing just in terms of general activity that we're seeing there is that's really a business as usual, if not, you know, heightened urgency kind of area of the market. So as it pertains to, you know, building out wet lab or even just office space for any life science related tenant, you know, whether they're focusing on other research or, you know, other business lines that they've had in place already, or they're going to completely pivot to a COVID-19 type situation where their R&D shifts to that sector, they're still very active in dialogue with us in terms of securing space. And predominantly the only delay that they're facing, you know, they're still seeing lots of support from their capital backers. They're really just dealing with construction delays. And I think that's something that David touched on earlier. And I think that's going to be kind of the lagging issue that as the situation improves and as people are starting to return to normal or a new normal, that's going to be the predominant issue that people are trying to navigate, both on the tenant side and the landlord side. I think you're going to see a lot of contractors coming to landlords with either, you know, liquidated damages provisions or ways to essentially try and exit contracts and take on new ones. I think it's going to be a little bit of a feeding frenzy and a backlog. And I think people are really going to be kind of fighting to get their projects done on time. And I think it's going to be, again, that sort of push-pull relationship and making sure that owners are being cognizant of what their contractors are up against, and whether that's amending an existing contract, letting a contractor out of that obligation, or letting them pivot to something else, I think is important to know. And as a tenant or occupier, it's equally important to be aware of that, because if, for instance, you had plans to be into space, you know, January 1, 21, understandably, construction has been, you know, called off by the state for a few weeks now, and that's causing a backlog that isn't necessarily going to be linear. So if it's a month construction delay, it could potentially be much longer delays based on lead time and lead time items that get backed up in the supply chain as well.
Absolutely. So I think David has a hard stop, so we'll let him go. Alex, if you want to stick around for another couple of minutes.
Thank you, David.
Thank you.
And yeah, if anybody, you know, who's sitting out in the audience has questions after the fact, I think we're pretty easily reachable. We can put you in touch with these CBRE guys and get the full force of their information clearinghouse.
Definitely.
You know, the only thing that I thought of that we didn't touch on was, you know, you started talking about the life sciences use. How about like the tech industry? Are we seeing, I would imagine that's another one that, you know, depending on where they, like what kind of service they provide, they're either going gangbusters or, you know, they're all working from home and not looking for space.
Yeah, so I mean, we do a good bit in that sector as well, and we work pretty directly with our tech practice group. I think a lot of the useful information that we've been pushing out to those types of users and occupiers has really been pertaining to construction, which we've talked about before, and also just general workplace strategy and also furniture strategy, which sounds odd in this type of situation.
Yeah.
But we, believe it or not, have a furniture practice specialist. And there, I think we're just going to see general shifts in terms of the trends and actual sort of ways that people are going about furnishing the spaces.
Yeah, this is impacting everything. That's really what we take away from this, is that it's what started as, you know, a virus that we weren't really quite sure what it was going to do to this world. It's now having everybody rethink. We're talking about everything from the layout to like the actual materials used in office furniture, right? Shared furniture.
Exactly. And I think what's interesting is, I mean, we can certainly circulate it. They put out a really good white paper just in terms of, changing surfaces, even so much as chair adjustments and movable desk adjustments so that they're lower touch surfaces, antimicrobial surfaces, et cetera. Just to general density questions. I mean, the ongoing question that has been kind of, the debate has been raging for a few years now is the kind of open plan workplace and densification of the workplace versus traditional kind of perimeter offices and cubicles. And there've been a lot of kind of tech proponents of, mainly led the charge by Google in terms of the bump in factor. And now people really don't want the bump in factor, obviously, for clear reasons. But additionally, I think there's been a lot of literature published in terms of just the lack of productivity. And I think what we're seeing, at least in our tenants and our clients that we work with, is a trend towards more of a hybrid approach. And while you need some open area and you certainly need a collaborative workspace, we're seeing a lot more huddle rooms, we're seeing a lot more phone rooms, and especially something, like a law firm, you obviously need privacy and you need to be able to get on a phone call, without trying to, fight and speak over someone who's sitting next to you. That's just not feasible. On the tech side, one of the bigger questions that we've also been getting is, are you seeing that there's going to be a shift towards occupiers taking on less space? And believe it or not, that's one thing that we really haven't seen. It's actually been the opposite because of the kind of de-densification of these workplaces. We're actually seeing these requirements growing a little bit. And also I think some people are realizing that, hey, you can be pretty productive and some employees are able to work from home. I think the general consensus is, while it's doable and it's feasible, people do genuinely miss the human interaction and the ability to be physically in the office. So while it's certainly a nice to have, and I think everyone's facility with Zoom and other telecommuting tools has been increasing, people are realizing that it's genuinely, especially in the real estate industry, obviously, it's genuinely important to be able to physically see people.
Yeah. And not to mention that it's a minor miracle that one of my kids hasn't come into the background or tried to put me in a chokehold.
Oh, sure.
There's a cat hovering somewhere beneath my feet that I'm waiting to knock everything over.
Of course. It's a whole different set of issues.
Yeah.
I just had a question related to the prism through which your clients are viewing the longevity of the issue. So a lot of the solutions that we're hearing about are short-term solutions, April, May deferments or abatements. Is there any kind of thought from your client base or internally at CBRE as to how to approach this if it becomes kind of a, up and down problem? So perhaps we return to work in June or July, but then there's another bump in the road 6 months from now or a year from now. Is that a concern that you're hearing about? And what are some of your thoughts with respect to that?
Absolutely. So at least, and I think you're talking about just from a workplace standpoint primarily. Yeah. I think also it definitely does tie into a rent abatement or rent forgiveness standpoint as well. But from just the workplace perspective, I think the consensus, at least in our workplace strategy group and our occupier group, is that this isn't going to be the type of situation, whether or not there's a vaccine within 12 months of this or not, that it's going to be a dive in headfirst situation. I don't think anyone is going with the expectation that they're going to kind of jump in just the way things were and everyone's going to get on the respective train line or car that they take to work and just immediately start business as usual. I think what's going to happen is it's going to be a phased approach at a lot of places. I think in the real estate industry, at least for us, we've been discussing not necessarily going into the office every single day, but going when you have specific meetings that should be held in person. You have site inspections or tours, and potentially driving in for those versus commuting via train. In terms of just occupiers getting up and running, I think there's been a number of issues that they've been looking at, and I think for us, the most interesting ones are coming from tenants that are about to sign a lease. They're looking through their options in terms of incentives. They're looking through their options in terms of furniture and layouts, and they're trying to figure out how they're going to get back up and running. because new hires and ramping up these operations is also a huge component. And that's something that these groups are worrying about, just in terms of integrating new employees. I mean, some of our clients are doubling and tripling in size. And if you're doing that, conceivably, when you're hiring people, it's easy to say from a financial standpoint, well, our run rate is X and it's going to be X times 2, in December. But realistically, what that means is there's going to be twice as many people in your organization. And it's really tough to make a smooth integration without kind of a physical actual mixing of those two groups, kind of the legacy group and the new group. It happened to us at CBRE. We were part of a team that stemmed out of Boston, and we were merged together. We were formerly Transwestern and went over to CBRE, and it was about 100 employees that did that. And basically, the physical merging of these two offices, they were in two separate buildings in Boston, was crucially important to a successful integration. So I think it's going to be a phased approach for sure. I think it's going to be, definitely a case-by-case scenario in terms of looking at what the drivers are and what needs to be done from an organizational standpoint. And then from a business standpoint, in terms of rent relief and how you're going to deal with rent paying when you worry that something like this could, God forbid, come back for a second wave. I think the same principles apply. You need to have an open dialogue with the landlord. They need to know what the drivers are for you as a tenant or occupier, and you need to know what the drivers are for a landlord. And it's really just on both ends, it's a cascading effect. If you're a group that, is in an office, but you have a strong e-commerce component, or let's say you have a strong hospitality component. I mean, Airbnb is a great example. Marriott Corporation is a huge one. I mean, these are companies that are needing to completely rethink the way they do business and drive revenue. And I think what then is the lagging indicator is how they utilize and occupy space. So it's relevant in a lot of ways, and it just depends on the organization. But I think it's a fluid situation, and it's going to be really tough because nobody really knows what exactly the new normal is going to look like and how soon that's going to happen.
All right. So I think we're running a little over an hour. So I don't see any questions. I think we'll leave it there, I guess. Lee's probably already Googling how to get all that antimicrobial furniture for his workplace and his home. And
I actually was Googling that while Alex was talking.
I know it.
So I'll circulate that in the follow-up email to everybody, the antimicrobial, I can't even say it, antimicrobial information. But we'll have this up probably over the weekend or on Monday as a recording. So if there are questions, feel free to circulate them, and we'll try to get the best answers for you about either issue, whether it's the issue that the senator spoke to or what Alex and David gave us. We'll try to answer those as quickly as possible.
Yeah. Alex, thanks again. And
thanks for having us.
Dave again for us. And yeah, thank you for everybody for joining. Happy holidays, whatever you're celebrating. And
happy holidays. Have a good weekend.
Happy holidays. Thanks, everyone.
Take care.